It's about that time of day again. My name is Joseph. Tuesday evening, July 10th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish and trying to go back into yesterday's trading range. And I have my eyes on a key spike in channel battle zone for the most reliable selling opportunities tomorrow morning. The S&P is bullish and trading at the low of a spike and range pattern this evening, but a recent bear spike off the prior month high is telling me to stay patient and wait for the two-try rule before getting either a 1-2-3 reversal or a move back up to retest the highs tomorrow morning. Nasdaq is officially bearish at this point and headed back to last week's close. So my plan is to use a new hidden bear channel for reliable selling opportunities up at the highs tomorrow morning. Gold is bullish as price rotates back into the range from yesterday. And I have my eyes on a spike in channel for the most reliable buying opportunities on Wednesday. And of course, last but not least, the euro is bullish after a successful 1-2-3 reversal. And I'm waiting for buying opportunities now using a hidden channel support tomorrow morning. Boy, guys, I got a great newsletter in store for you guys and gals tonight. We got plenty of reliable trading opportunities setting up for Wednesday's session. But before we jump into those charts tonight, I need to remind you, if you're watching me this evening on YouTube, you can find a detailed description of this entire strategy written out right here on my blog at sidewaysmarkets.com. Also, if you have any questions about anything covered in this video tonight, please remember to post those in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything we do here at School of Trade, head over to the blog here at sidewaysmarkets.com. This is where all the action happens every day, and make sure you join our mailing list. Promise never any spam, only the good stuff coming from me every day. Give me your name and your email address, and I'll shoot you an email every time I publish something new. Also, don't forget, if you're on social media, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice. If you're hanging out on social during the day, I'm always posting charts, links, videos, quotes, all kinds of pictures, all kinds of great content that you won't find anywhere else. So follow me on social in the lower left-hand corner. And speaking of charts, how about we put all the charts from tonight's video in an easy-to-download location? That sounds like a plan. There's that link below the video tonight. Follow that link and grab all the charts from tonight's video and get them ready for tomorrow's session. Speaking of tomorrow's session, in the upper right-hand corner, I've got a free pass for you. If you're not a member here at School of Trade and you'd like to come out and join me as a guest in our trade room, grab that free pass in the upper right-hand corner. And if you have any trouble with our free trial, with our free pass, any questions about membership or anything we talk about tonight on the newsletter, right, don't forget you can always post those comments in the comment section below, or you can always hit me up on live support if you have any questions along the way. Hope you guys had a great Tuesday. Had a great Tuesday today. Boy, oh boy, got that euro on that 1-2-3 reversal. So a great way to finish up our Tuesday session. Had a great day today. Hope you guys did as well. But you know what I always remind you guys, we're only as good as our next trade. So let's jump in and let's grab a look here at tomorrow's plan. Tomorrow, of course, is Wednesday, July the 11th, right? Midway through the kind of first full week of the month of July. I realize it seems like we're already halfway through the month right now, but obviously with that holiday week, we got some catching up to do. Tomorrow's the 11th day of the month. It's a Wednesday, so we know we always have, right, that inventory report on Wednesday mornings. If you're a crude trader out there, I always say, right, my rule is I trade until 10 o'clock Eastern time on Wednesday mornings. 10:15 is about the kind of the last or the worst case cutoff for crude oil traders tomorrow morning. So tomorrow morning, Wednesday morning, we get inventories at 10:30 Eastern time. 10 a.m. is my cutoff. I wouldn't recommend doing anything with crude after 10:15. And then trying to trade after the report comes out, 10:45, 11 o'clock. In my experience on Wednesdays, only one day a week, you really got to be careful on oil after that news comes out. So I stick to prior to 10 a.m. on oil on Wednesdays. And of course, we also have that inflation number tomorrow morning. PPI, of course, at 8:30 Eastern time. Inflation means the dollar. The dollar means gold, right? The dollar means the euro. So we talked about that last night. We definitely expect, right, to see gold and euro being the market movers tomorrow morning around that 8:30 news coming out tomorrow. So 8:30 PPI, it's an inflation number, right? So gold and euro, and of course petroleum status report, that inventory report, right? 10:30 tomorrow morning. So get to it early if you plan on trading oil, right, tomorrow morning. Other than that, though, we got pretty open spaces tomorrow morning. So looking forward to yet another great day in our trade room. Now let's grab some charts here right now. We got crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the mighty euro. Crude is bearish and trying to collapse back into the weekly trading range. And the short-term spike and channel pattern you can see in the chart is telling me to look for selling opportunities up in the battle zone this evening. The only variable at this point is this strong push higher, which is coming off this afternoon's API report, which showed another almost record-breaking draw in oil inventories. And of course, as the draw in inventories, right, that leads to price spiking higher. So I'm looking for buyer failures, right, to sell if price goes back, right, if the buyers fail to hold this pullback. But if the bulls can hold this pullback, we then will go back up and try to retest that high, and I'll look for a new bull channel on the way higher here. Now, of course, looking at the chart here tonight on the oil, one of the most important things to understand is what we're dealing with here in the big picture, right? We had a big strong spike up here late last week, and then of course, right, we used this trading range, right? And this trading range, right, pendulum swing up, pendulum swing back down. We go up and we assume now we're going to head back down into that trading range, right? Whenever I have a trading range, I want to buy low, make it a little bit larger there, right? And I want to sell high. Right, so here we are. We're up around the highs of that range. Not a great spot to be trying to be a buyer. If we would have seen a little more strength in the buyers today, I would have been a lot more, open to being a buyer up here. But right now, we just simply don't have enough proof yet that these buyers really can hold this. So again, we're above the high of a trading range. I want to sell going back into that range. Now, combine that with a strong move down into this spike and channel pattern. It's a very small little spike and channel, but spike and channel patterns are really, really important. Anytime I see a spike and channel pattern, I always go back and look for a trade around the base of that channel. So you take the first pullback and the base of that channel, that becomes kind of your sell zone, and I look for a sell, right, coming off of, again, kind of the base, right, of that channel, right? So here's my spike and channel now. If I zoom a little bit closer on this, right, here's that spike and channel, right? Spike down into our channel, and you can see where we are, right? We're right around the base, right, of that channel. So you put these two clues together, right? We got the trading range, right? We want to sell above the highs, unless, of course, we see a strong enough move, but we just don't have any proof these bulls, right, really can take control of this thing right now. So we have to assume we're going back into the range, okay? Knowing that, right, we also have that bear spike and channel. The bear spike and channel tells us look for a sell right where we are right now. Okay, so we got two big clues right now telling us, right, that we should be looking for a chance to sell. The only reason why this isn't a slam dunk going lower is because of this little move right there. Now, I talked about this earlier. Every Wednesday at 10:30 Eastern time, we hear from the Department of Energy, right, the DOE. Okay, well, on Tuesday, at 4:30 p.m. Eastern time, we hear from the American Petroleum Institute, right? One is a government agency. The other is kind of like a kind of an industry watchdog, association, right? The API. Okay. The bottom line is that, and these really should have been in different order here. We heard from, it's Tuesday, right? We heard from that API report. Tomorrow we're going to hear from the DOE, right? The the real inventory report. Well, the bottom line is, right, is that this move higher is all coming off of that API number. The big question was that API report, is it strong enough to really give the buyers, right, the legs they need to run this back up to retest that high? Or will we see what happens usually after most news? We get a little bit of a flurry, but then eventually it ends up collapsing and we end up going right back in the direction that we were before the news, right? So those are really the two big question marks right now, right? My gut tells me we head back into that range, but I have to respect the fact that we just came out of major news. So let's play both sides of this coin, right? I want to be a seller. I want to sell back into that trading range. I have that spike in channel. That gives me timing. I have my range. That gives me the magnet, right? How do we get short here? Well, getting short should be pretty easy at this point. We had a strong move up, a pull back to the moving average, and we're ultimately looking for that 1, 2, 3 reversal. Now, the easiest way to earn a profit, I shouldn't say the easiest way, the most reliable way to earn a profit is to always put yourself in the opposite side of the in the shoes of the opposite side of the market, and try to think about where would the opposite side be getting in and where would they be getting out. In other words, if I want to be a seller, where do I think the buyers are going to start to get their feet to the fire, right? Where do we think those buyers are probably getting in? Well, if I was a buyer, I'd be getting in right about there, right, on that pullback. If I was a buyer, my stop would be down below that low. In fact, if I was a buyer and I saw the market reverse on me here, I would probably start to exit my position right about there, right? If not, get stopped out of that trade. So I can put myself in a position where I can anticipate if the buyers who are trying to buy this API report, if they get stuck and they have to exit for a loss, they have to become sellers, right? They're not going to hold it all the way down to the low of that range, right? They're going to get out with whatever they have left in their account when they have a chance to. That's where, right, I want to sell. That's where I want to sell. I want to sell in a bear market where I think buyers are going to be in a painful situation, because when they find themselves with their feet to the flame, right? When they find themselves with that trade going right against them, what's going to happen? They're going to flatten their position. Buyers have to become sellers, and now we have sellers selling and the buyers are selling. So that's where I'm looking for a trade going short here, right, for tomorrow. I have this 1, this 2. I know where stops are, and I know that's going to be an easy place to look for a selling trade going back right into that range. Now, if we can get that move going lower here, I don't want to chase after it going lower, right? We always want to sell at resistance, right? We always want to have some sort of edge. So now what I'll do is I'll grab the moving average. I'll wait for that proof, right? We'll get the moving average coming over, and I'll look for that sell, right, off the high of the range. Again, we're trying to sell at resistance here now. We don't want to sell in the middle. We want to sell off resistance. So the way I would describe this is I'm looking for a buyer failure pattern, right? Split 74 area. And then looking for seller strength. That seller strength will lead to a seller pullback pattern. In other words, I want to get short where the buyers are getting forced out of their positions. And if it's successful, I then can look for a follow-up, right, off the high of that range. Now, where will my targets be on these trades? Targets, of course, we always want to respect the opposite side of that range. That will always be the most reliable place to put your target when it comes to a range. But you'll also notice that I've marked up, right, the pendulum swing. You've seen how the pendulum swing works, right? The amount we go above the range is usually the amount we go below the range. Now we have a much larger pendulum. The amount we go above the range is the amount we go below the range, right? So we have an example here now, 72.54. So first target will be at the low of that range. Runner target is down to that 72.54 for the sellers. Now, how about the buy side right now? Right? That's for the sellers right now. How about the buy side right now? What would the buy side look like? Well, there are two real environments we can look for a buyer. One would be we go below and we look to buy back up. Remember, we want to buy low, right? We could buy the low of that range tomorrow. right? It'll look something like this, where it goes rushing lower. We pull back to the moving average. We see the bears try to sell the pullback, and we look for that failure going back in. I call it the 2-try rule, right? So 1 try, 2 try. You're going to see a good example of that a little bit later on in this video, so stay tuned on that, right? 1 try, 2 try, and then I can look, right, to be a buyer going back up into that range. Now, keep in mind, if we do tumble, right, if we really tumble here, there's going to be a lot of momentum building up to the downside. So be very, very patient. What you always want to remember is, right, the bigger the move, the bigger the 2 try. So stay patient. Don't assume 1 try, 2 try. Let it try once, twice, and then we'll go back up, right, and buy the low of that range. So the bigger the move, the more the momentum builds, the bigger the 2-try rule is going to need to be before you're going to get, right, a good buy going back in the opposite direction. Now, what about if the buyers hold this pullback? They might. We're talking about news here. News is always the potential for, the market to kind of shift its focus. So what's the plan here? Well, if we don't see it collapse and drop back into that range, I'm then going to look for another strong leg higher. We'll draw that up as a new channel, and I'm going to look for what I call a hidden channel here, right? I'm going to combine off the highs, and that will give me a trend line. That trend line will then be pinned down to that low, and now what I'll do is I'll look to buy the low, right, of that channel. Now, just a heads up here, though, remember, you always want to know a couple things, right? You've got to know who has control, or what the momentum tells you, what direction, and you have to know where they're trying to go. So we have to be very careful here. We have to assume the market's objective on this oil is up at the high at 74.70. So we got to be careful, right? If we're going to buy that pullback, what we don't want to do is buy directly into that 74.70. So if it does just jump, right? If it really jumps, we're going to want to really be careful up here. We don't want to buy into that high. So we'll wait for the deep pullback. We'll buy it from there. Okay? Or we go through the high, right? Let's get some strength going through the high, and we can then buy pullbacks on the way up to that measured move and that prior week high, which, as we talked about last night, is probably going to be the big objective for those bulls. So just be careful buying into that 74.70. Either we want to go up, right, up and then deep pullback to avoid buying too high, or we want to go through it and then use it as support on the opposite side. As you can see here now, we get the plan for the bears, we get the plan for the bulls, but I want to make sure real quickly here, if you're here for the first time today, I know a lot of you guys are here watching this video for the first time today. I'm going to go over a lot in this newsletter tonight, a lot of terminology, a lot of stuff we talk about every day in our trade room with all of our members. If you're brand new here, I want to make sure I give you a bit of a shortcut, actually a really big shortcut, a much deeper dive into this methodology. And to do that, I'm going to give you guys a free trading course in the upper right-hand corner. Pause the video, not to worry, I'll be here when you come back, right? Grab that free trading class. That trading class will teach you more about all the terminology we use, right? All the patterns, all the analysis, right? What's a 2-try rule? What's a hidden channel, right? What is an overshoot, pendulum swing on a trading range? All these different terms, right? So again, pause the video, grab that free class. You will not be disappointed. Now, we got the plan on crude all ready to go. Let's keep moving. We got crude looking good. How about some S&P? Boy, this S&P just got beat up just before the closing bell here this evening. Remember, the closing bell electronically, right, is 5 o'clock Eastern time, right? Just before the closing bell, we just saw some headlines, right, that we've got some fresh, right, some fresh and interesting tariffs, right, being enforced now between the U.S. and China, right? There's this tit-for-tat trade war going on right now. It started last week, and the reason why we're seeing this big move down right now on a lot of these markets is because we just heard about this fresh set of tariffs that were released from the White House, right? So that's what's leading to this big move down right now. I'm going to be honest, the why is completely irrelevant, okay? And I'm going to hopefully save you a lot of time. Don't worry about the why. Worry about the what, the where, the when, right? Who cares why the market dropped? but I do know the market just gave us a big bear spike down. I don't care why, but I do care what, and I care when, and I care where it went. Right? The why is completely irrelevant. Okay, so don't worry too much about understanding the why. All it will do is waste your time. Right? And remember, the markets are wise, right? The wisdom of crowds. They're the most efficient things we have, right? The current price, that reflects all the opinions, all the biases, everything, right, leading up to this point. Okay? The most reliable information you're ever going to get is right on your chart. Okay, it's not coming from Bloomberg, it's not coming from CNN Money, it's not coming from Yahoo Finance, it's not coming from the news media, right? Because all they're doing is getting it after the fact and then spinning it, right, to whatever fits whatever narrative they want you to be thinking about that day. So turn off the news media, forget the why, right? Focus on the where, the when, right, and the what. Okay? Now, S&P, we're bullish. I know, we're bullish though, with a spike and range pattern. But it's easy to see this recent spike lower is quickly giving the bears an opportunity for a 1, 2, 3 reversal, going back down to, I would assume, that prior week low. Now, I want to buy this market and retest that high. But the strength of this move lower, it's way too obvious to ignore. It tells me that sellers are likely going to get one more opportunity to sell it again, and I need to stay patient and see how it goes. If the sellers fail to take control of this market, I'm looking for a seller failure into a bull pullback pattern for the most reliable entry going back to the highs tomorrow. However, if the sellers complete the 1, 2, 3 reversal, then I start looking for selling opportunities using a hidden channel with a target down at the prior week close tomorrow morning. Most important information right now, we have a strong trend here, right? A bullish trend coming out of the holiday week, right, last week. We ran all the way up to that prior month high, which we talked about in last night's newsletter. And we have 1, 2, 3, a triple top at the high. Now, we always talk about this, right? Anytime we have a bull market that double tops, that tells me this is a range. I mark up the high, I mark up the low, and I look to buy below the low of that range using what we call the 2-try rule, right? Found some great opportunities today, right, on a number of different markets using that technique, right? So we know that the S&P, strong move up, pulls back, double tops, comes off. That's a range. Okay, now where are we? We're down at the low of that trading range, right? And just like we talked about on oil, what do we do at the low of a range? We look for a buying opportunity. But we also have to remember, right, that short-term momentum is really important. Just because I'm at the low of this range does not mean I should blindly buy this market. We have to dig in a little bit closer now. You can see this strong, right? I mean, it almost looks fake. It almost looks like my charts are missing some data, right? I was watching it develop here earlier this afternoon thinking to myself, this is just insane, right, how this market is just tumbling. It's not a huge surprise considering the fact they once, twice, 3 times up to that prior month high. What probably started as some profit taking just before the closing bell, right, has now kind of fueled or kind of snowballed into, right, this big collapse off that high. So the bottom line is I have to respect this momentum. And there are ultimately 2 scenarios I'm looking for. One is going to be whenever I have a strong move in one direction, I usually can expect to see a pullback to the moving average, right, and at least a very strong attempt to give me another leg. In fact, oftentimes, this will end up being a measured move. The length of that leg down is the length of the next leg, right? AB equals CD, right? So look for that as a big target, right? That would be the scenario for the sellers. They hold the pullback and they run it lower. This, by the way, would also be that classic example of a 1, 2, 3 reversal, which we talked about in last night's newsletter. Again, if you want to learn all this terminology, grab that free trading course in the upper right-hand corner, right? You'll learn more about this. So at this point, it looks like the bears are going to grab this. Now, there's no way to really tell, right? But here's what I'm looking for to be a seller. I'm looking to use this low, line that low up, market the high, get that moving average, right, and look for a sell up around, right, up around that high. It's called a hidden channel because I'm drawing the channel off of these lows, and the channel high is kind of hidden, right? It comes off that high. Okay. Anytime the market reverses, I always like to look for a hidden channel like that, right? So that's the chance for the sellers, right? Selling as it goes lower. In fact, if we can see a strong move continue through it, then I can go out and I can find another channel, a spiking channel, and I can look for another sell off the high of a new channel. Again, once I have new lower lows, I can bring that up and create another place to sell off that high. So for sellers, I'm looking for a hidden channel, right? Hidden channel up off that high. Okay, for the, right, if we don't get that big of a move and it collapses down lower, find that new low up to that high and look to sell off the high of that channel, right? Now, where's the target going to be for these sellers? Well, the target is pretty simple. Again, a measured move will be an easy target depending on wherever that sets up for us, right? We don't really know enough about it yet. But honestly, I've got my eyes on this prior week close. Remember, last week was broken up by the Independence Day holiday, right? That 4th of July holiday. And we finished the week last week with non-farm payrolls, the biggest news we get of the month. But remember, barely anybody. Was anybody working last Friday? Were you working last Friday? Well, I wasn't, right? I wasn't. I was sipping a margarita, hanging out by the pool with family and friends last Friday, right? So the bottom line is, right? I love my margaritas too. We make them really good here in LA. The bottom line though is that a lot of people probably were never even there for it. And oftentimes when we have a holiday break, the markets find a way of coming all the way back to where we left off. Almost as if to do kind of a mulligan, right? Like a reset, like a redo, right? So that prior week close is definitely on my radar here for those sellers. And you can see now it's just continuing. Look at this thing, continuing here, right, to drop. So at this point, I'm going to have to abandon my plan to be a buyer here because this is just getting ridiculous, right? There's no way you can look at this market and say, oh yeah, let's buy this market right now. Nothing like trying to buy a free fall, right? So let's go out, let's grab our low, let's bring it up to that high, right? And now we know where we can look for that sell, right? The moving average has to come down. Now we'll have to wait and see what we get here, right? And we get up to the top, buyer failure, strength into pullback back down. But again, the bottom line is I always want to sell up at a level of resistance, right? Now, again, if it keeps going lower, right? Keeps going lower, keep on extending that channel lower. Now, I never want to finish this up here without talking at least about the bulls, because although it looks like the writing's on the wall right now for the buyers, going back to that prior week close, what would it look like for the bulls to take this thing? Well, I know, besides a small miracle. Well, first of all, it's going to take a move back to the moving average. We've got to wait and see if these sellers can run this thing lower. If they can't, we then need to see a short covering rally, right? That short covering rally. Now, normally, I'd be looking for this failure right here, right? That seller failure. But the momentum is way too strong right now to be trying to buy a seller failure, right? Remember, you can buy a seller failure when the market's bullish, right? When the market's bearish like this, you can't buy seller failures. We need to see that seller failure on strength going higher. Once we have that, then I can look for that buy coming off of that moving average, and I can buy it on the way back higher from there. So it's going to be a little bit of a waiting game here if you want to be a buyer on the S&P right now, right? We've got to get back above the moving average, not just by a little. We have to get a nice strong move up, get that 1, 2 through reversal, right? We'll find a new rising support trend line to protect ourselves against the bears, and we'll look for that buy off the moving average for a target back up to retest that high. Until then, though, I'm watching to see when we get the pullback, and we'll look to see if we can sell either off the high of a hidden channel or off the high of a spike in channel as we make our way down to, right, that prior week close. So a little bit of a lengthy explanation there on the S&P, but I want to make sure you guys truly understand, right, how this works. Now, how about some Nasdaq? The Nasdaq is bearish after the buyers tried and failed twice to retest the overnight highs this morning. This 1, 2, 3 reversal tells me the sellers have clear control. But the low of this channel and the measured move support, which you can see now we are breaking through, right? I really don't want to sell as the market is falling. So here's what we're going to do. This is a little bit of a glimpse into what the S&P may look like in a few hours. Now, once again, we saw the market go up on the Nasdaq, right? And what happens? Anytime we see a strong move higher, we always expect to see a two-legged pullback and a retest of the high. So the buyers tried, right? The buyers gave it a really good shot there to retest the high, but they were unsuccessful. They failed. And they came back and they tried it again, right? They came back, tried it again. And what is interesting is you can see that same symmetry, right? The size of the move higher is almost identical. What do you think? Do you think we could also use that same distance as we go higher here again? I wouldn't be surprised. So I'm keeping an eye out for the one try, two try failure, right? And again, if you want to learn more about that terminology, all those patterns, grab that free course in the upper right-hand corner where you'll learn about the two-try rule, right? Strong move up, buyers try once, right? They're not going to give up after the first try failed, right? They'll try it again. Once they fail off that second time, you can see what's happening, right? All hell breaks loose. The buyers are running low on momentum. They've tried once, they've tried twice, right? They're probably getting sick of losing money, and they say, heck with it. They cover their positions, right? Or they flatten their positions, and the market collapses. Now, you'll notice I had originally drawn on, right, a channel on this chart, and I was looking for a sell up around that battle zone, right? But now we've got to do things a little bit differently. So here's what we do know. We know that we have, right? We know now, let's get that out of the way here just for a second here, guys, right? We now know the one thing we know two things. We know first the market's bearish. Okay, we want to be a seller. We also know that we have a falling resistance trend line here, right? That's kind of your anchor, right? That's your anchor. If all else fails, we can rely on that trend line. Right, that trend line is grounded. It's a trend line which has 1, 2, 3, 4. Anytime you see a trend line with more than 3 tests to it, right, you know that's your key trend line, right? That's going to be what everybody bases their perception of selling low or buying high, right? So right now, how far away are we from that key trend line? We're pretty far away. So you would think of this now as being selling relatively low. Okay, well now let's put some more flesh on this bone right now, right? Now remember, we have that big collapse. I don't want to sell down here. I want to sell at resistance. We've got one level of resistance. What if we took these lows right here, bring it up to that high, and what if we use that as a channel? Better yet, what if we did it here as well? That low up to that high. See, that looks pretty good. Now, here's what I like. Watch. Take that one try, two try, bring it back up again. Remember, right? These two moves higher for the bulls were symmetrical, right? Symmetrical in price. They may not have been symmetrical in time, but time symmetry is no longer as effective as it was 10, 15 years ago. Right? When I first became a trader, time symmetry worked quite a bit, right? But it doesn't work as much anymore. You really got to line it up properly. So now, could we line up that symmetry in price with that high? Ooh, boy, that looks pretty good, right? So now we'll adjust our battle zone. Pardon my drawing skills here, right? But now we know where we want to be selling. Right? And that gives me a general idea of where I can sell. It's a bear market, right? Somewhere up around here. Again, if all hell breaks loose, I can rely on that trend line, right? But ideally, though, we get that moving average coming down. We go to this for a second here. We get that moving average coming down, right? We come back up. It's a pullback pattern off the moving average, right? Or maybe we go above the moving average. Maybe we really jump up, right? Maybe we jump up here. And as we jump up, we go above the moving average. What's going to happen? the buyers will try to buy that pullback. This is the exact same thing we talked about on oil. It's a bear market. If I see the buyers try to buy that pullback and take it higher, look what they're fighting against, right? The key trend line. That's not a very good spot to be a buyer. Not only are you trying to buy against the momentum, right, but you're also buying into resistance. Now, personally, I hope the buyers take that, because then I can look at this now as a failure. I can sell it with a failure, get that moving average back down. We can finish off this move right down to that prior week close. As I mentioned earlier, right, last week, while everybody was sipping Mai Tais and margaritas, right, and drinking Budweiser by the pool for 4th of July, God bless America, right? The market finished the week with non-farm payrolls, right? The market finished the week with non-farm payrolls, right? Nobody was watching. Nobody was there to see it. So a possible redo, right, back down to that 72.31, right? So again, it's a buyer failure pattern into a buyer failure pattern into a sell, right, into a bear pullback pattern. Again, learn more about these patterns. Grab that free class in the upper right-hand corner, right? You will not be disappointed. All right, guys? So as we keep going lower here, get up and sell back down, right? Now, what if we keep going lower, right? What if we keep going lower here? If we keep going lower, nothing changes, right? I'm still looking for that new hidden channel. I'm still looking for that sell, right? It doesn't matter, okay? Now, last but not least, how do we turn bullish again, right? What would a bull market look like here? We look for what we call the 1, 2, 3 reversal, right? We talked about this last night on the newsletter. That's 1, 2, 3. We got to pull back to the moving average. 1, strong leg higher. 2, pull back to the moving average. It's got to pull back to the moving average. Okay, a lot of times what happens is we don't pull back to the moving average, and it's common for a new trader to assume that's the 1, 2, 3. It's not enough. It's got to pull back to the moving average, right? The markets can be very, very strong, but until they pull back to the moving average, there's no proof. Okay, so 1, 2, 3. 3 is that strength move going higher, right? That's the 1, 2, 3. If we see a 1, 2, 3 reversal, what do? Same thing we're talking about right now, right? We draw off that high, find that hidden channel, right, and try to buy off that hidden channel. Now, this, of course, is not drawn to scale, but hey, maybe we get a chance to buy off that trend line, right? Maybe we can use that, remember, key trend line, maybe it becomes support for us, right, as the bulls take control. Where would the buyers want to go? Well, the buyers want to go back to that unfinished business, up to that 73.35. Where do those bears want to go? My gut tells me we're trying to go back to that prior week close. And also, too, and this goes for all the E-minis, if we head back down to that prior week close, watch for a trading range down here. Okay, watch for double bottoms. That will tell you get a range. And if we see double bottoms for a range, yeah, you know, we're looking to sell right above the high of that trading range. In a bear market, if we see double bottoms, we know the market goes range bound. If the market goes range bound, we then look to sell up above the high of that trading range. All right, guys, lots of opportunity here setting up for the E-minis. How far will it go right now? How far will it go? We're waiting to see, right, when we'll get this pullback off the low. I'm not a big fan of selling low, and neither should you. So stay patient. How about some gold? The yellow metal is bullish and headed back into the weekly trading range this evening. Surprise, surprise. And this strong move higher, combined with the 2 higher highs, tells me this is most likely a spike in channel pattern. So my goal is to look for buying opportunities down at the low of this channel tomorrow morning. Now, I know I'm running late on time right now, almost 40 minutes into this video right now, so I appreciate you guys sticking around here with me tonight. That tells me that you're dedicated to your success. If we take a moment here on gold and zoom out real quickly, yeah, right, that's a pretty nasty trading range. And even more importantly, that trading range has a bull bias to it, right? Strong move up, then into a trading range. What do we do with trading ranges? We buy low and we sell high, right? We fade the breakouts, right? Because in liquid markets, not those illiquid penny stocks and cryptocurrencies, right? I'm looking at you out there, right? On real markets, right? Real liquid markets, most breakouts are going to fail. And you can see quite the whippiness, right, to this gold market. Remember, this week we have a lot of key inflation numbers. Tomorrow we get the PPI number, for example, at 8:30 Eastern time. So we may not get much relief from this kind of crazy market here this week, right? But I'll take movement over no movement any day of the week. So here we are. We're down below the low of this range. Right? I'm measuring the size of the move lower, trying to project where my target will be, right, for the run back up to those highs tomorrow. We have a strong move up, a pullback, and a higher high. I'm going to connect those two highs. I'm going to bring it down to that low, and that creates a spike in channel. Now, wait a second. We talked about a spike in channel just a moment ago on oil. Remember this spike in channel on oil? Spike and channel down. What did we talk about on oil? The base of that channel is where you want to sell it, right? Well, how about this one now? Here's a bull spike in channel. Strong move up, that's your spike. The pull back, the new higher high. Once you see that new higher high, bring that low, bring that down to that low, and now we know where we want to buy. Well, think about it too. I don't want to buy the high of the range, right? We don't buy the high of the range, right? We buy the low of the range, right? So I don't want to buy high here. So I want to buy nice and low. Let's get this price down so I can buy it, right, as it comes back up. So that's my plan here for the bulls, right? I want to be a buyer down below the low of this range. And how do we do that? What would that look like? Well, it'll probably look similar. I don't see an example on this one right now, but 1 try, 2 try, and that 2 try rule, again, you'll learn more about that in the free course, right? Upper right-hand corner to learn more about the 2 try rule, right? Grab that free trading course, right? That failure into strength, strength into a pullback pattern, right? So it's going to be a seller failure into a bullish strength, into a bull pullback pattern, right, as we try to make our run going higher here tomorrow morning. Now, I haven't forgot about this hidden channel either. You'll notice I have a trend line coming down here, right? So don't be afraid, 1 try, 2 try, don't be afraid to buy it if it goes even deeper. All right, until we can see it really break through that hidden channel low, I'm looking for those buys going back up to retest that high. Now, what if price keeps going higher here? What if it doesn't pull back? There are really 2 scenarios here. One scenario would be if we go up, we can still look for the buys at the lows, right? So if we go higher here, just don't buy up here, right? That's the key, right? We can go higher and still look for that 1 try, 2 try failure back in. We can still buy that low, right, if it goes higher here. If it goes really high, though, right, if we do get that run up, or if it just does what gold's been doing lately and jumps up, watch out for that strong momentum. We're not going to buy up here, right? But we also can't sell. If it runs up, what do? We wait for the momentum to calm down. We look for the buyers, try it again, right? Strong move up. Moving average comes over. We're at the high of the range. What do we look for? We look for a sell. Look for that 1 try, 2 try into a failure, failure into strength, strength into pullback. Just be careful. Don't sell too close to that low, right? It'd be a buyer failure, right, into seller strength. Okay, we see a good example of that back here, right? Up, failure, strength, pullback, down from there, right? Those are the patterns we look for, right? So up, failure, strength, pullback, right, down from there. Okay, we go lower, 1 try, 2 try, failure, right, back up into that range tomorrow. Okay, so don't be surprised if we get either one of those scenarios. Gold has really been a mover lately in the overnight session, so keep your eyes open on that. Last but not least here, how about some euro? Boy, that euro really made in for a really great boxed-in environment today on the euro. Euro is bullish with a 1, 2, 3 reversal. That tells me there is potential for a large short covering rally going back up to Monday's high. And my plan is to look for buying opportunities at the hidden support levels waiting for tomorrow. Now, I want to point something out on this chart because I thought this was quite interesting considering we've talked about tonight already, and that is look where we finished off the day today. Right back at the prior week close. Again, last week was a holiday week, and oftentimes, right, we'll see the market run away and then come all the way back, right, to where, again, almost as if to give everybody a clean slate to start again. Kind of interesting how that happened, right? So we're right there at that prior week close. Very interesting, right, to see that prior week close on that chart. Here was a great example today of a strong move down for the bears. They went all the way down to that measured move. But then we saw the bears, they tried once, they tried twice. If you're with me today in the trade room, right, we saw this, right, we participated with this move going higher here, right, on the euro. And it was a great example here today, right, of what my nickname, right, which is of being boxed in, right. This was a good example today on the euro where the market was bearish, but they had nothing to do with it anymore, right? The bears, they hit their measured move. That's major support. They tried twice to keep going lower, two-try rule, right? That led to a rising support trend line. And at that point, the bears couldn't do anything with it. They were boxed in. They had nowhere to go. And so, of course, once we see that one try, two try at the measured move, rising support, right? That boxed in scenario, which I've talked about many times on this nightly newsletter, right? We see this 1, 2, 3 reversal. So now here we are, and I'm going to use the same basic technique we've talked about a lot already. I'm going to draw up. Again, I want to be a buyer, but I don't want to buy as we go higher. So I'm going to draw up a new trend line off those highs. I'm going to bring that up off the low, and that creates a level of support I want to use to be a buyer here. At the same time here, I can draw a trend line off of those lows right there, and that creates another support line that I can use to be a buyer. At the same time, I have a nice narrow channel, and if you're a client of mine, you know that whenever we see a nice narrow channel, we know the odds are very, very high that we're going to pull back and make another leg higher, right? We call that the price action cycle, and you'll learn more about it, right, inside of that free trading course in the upper right-hand corner. So the writing's on the wall. The bears don't have a lot of leeway right now. Again, I want to be a buyer off the low of the channel, a buyer off the rising support trend line, right? If the sellers can take control, it's going to require a strength, pullback strength, and then we can look for a new channel, right, going lower. So I have no problem being a seller. I just need them to show me some proof. So again, looking for the buy side right now, I want to see price go down to support. Moving average comes over. The bears will likely try here to reverse the direction, right? That's what I would do if I was a bear, right? I'm not a bear right now. If they're successful, we'll find that new channel, and we'll look to sell off the high of that channel tomorrow, right? However, if those sellers cannot take control, right? If they fail to hold that pullback, we then can look for that seller failure into bull breakout, right? Bull breakout, bull strength, into bull pullback, right? And that next leg higher, right? How high should we probably go? This will probably be a measured move, A, B, C, D, right? And of course, the easy target is back up to retest that high. So now we know what we're looking at for both the bulls and the bears, and we are ready for battle tomorrow. The only real question right now I have is how far are we going to go on the E-minis? That's the big variable tonight. So get your popcorn ready, folks, because it could be a very active overnight session. Guys, I hope you learned a ton in this newsletter tonight, and I hope I can have the opportunity to do more of this with you every day as a member of our trade room. Don't forget, I've got a great free trial on our homepage at schooloftrade.com. I'll put all the links in the description of the YouTube video. And don't forget, we have beginner, intermediate, and advanced levels of membership, right? 3 different classes that basically meet you where you are on your journey. If you're a brand new trader, if you're still learning, grab the beginner course, right? You'll learn all the most important. Remember, there's a lot of free information on Google these days, but most of it is unchecked, unreliable, and always changing. I've been watching charts for almost 15 years at the same desk, same software, same time frames, right? I'm going to tell you what you need to be aware of and what not to waste your time on, right? It'll save you years, right? And probably thousands of dollars in wasted time and money over the years. So don't be afraid to get started as a beginner member, right? Our intermediate and advanced courses will only build from there. Got any questions for me? I'd love to answer your questions. You can call me in the office anytime you have any questions. My toll-free number is right there in front of you. You can also use live support on the right-hand side of all of our web pages. And don't forget, if you're on YouTube right now, you can always post a comment right in the comment section below. Thanks again for being here, by the way. I know you guys have plenty of other things you could be doing right now with your time, right? Like recovering from the holiday break, right? I tell you, man, you go on break for a week. I need a break after my break to recover, right? Isn't that the way it goes sometimes, right? Life gets busy like that when you come back from a holiday break. But it's great to be back with you guys. So keep in touch. Give me a call. Send me an email, right? I'm always here to help. And we'll see you guys same time, same place, right? Tomorrow morning, 8 o'clock Eastern time with all the members. If not, tomorrow evening before 8 p.m. Eastern time on our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.